Our guest today is considered one of the greatest thinkers and visionaries of our time. It's always an honor for me to interview him. Please welcome back to the show, Doug Casey, founder of Casey Research. Happy New Year, Doug. Always happy to see you.
Thank you, Daniela. And the same back to you. Although I'm not sure it's going to be such a happy new year. I'm afraid that 2021 is going to be more turbulent than 2020, actually. But we'll see.
Yeah, and I wish I had the front cover of Time. I brought this up in my Robert Kiyosaki interview where they had, 2020 with a big X on it saying worst year ever. And I never like headlines like that or sayings like that because I feel you always have to add to that for now, right?
Yeah.
And we don't know what 2021 holds, but so far not so good. So I want to start by speaking about this because when I was doing research for this interview, Doug, I went back to the reels and looked back at tapes and interviews we had done over the years. And you have been so dead on with your calls, okay? Even when you were talking about civil unrest and the possibility of a civil war and depression, and perhaps people at the time thought, okay, these are just some paranoid thoughts. But unfortunately, this has all really played out. So let's start with your thoughts on a Great Depression, which you've spoken about. You've said that a depression is a consequence of distortions cranked into the economy by taxes, regulations, and inflation. This is where we're at now, is it not, Doug?
Yes, and it's all being aggravated because the government is printing up not just hundreds of billions, but trillions of new currency units. And they're not just being dropped from a helicopter so everybody can get their fair share of stolen money. It's going to the people that are closest to the fire hose of money coming out of the Federal Reserve. So in fact, the rich are going to get a lot richer and the poor are going to get even poorer because the average guy saves dollars. And if the dollars are inflated out of existence, so are his savings. And at the same time, now that the Democrats have won, they're going to cement themselves in power. They're the same personality types that ran the French Revolution in 1789 and the Russian Revolution in 1917. The same type of people that are really interested in political power and controlling things more than anything else. So that's what we're going to see. And how are they going to go about this when there were 70 or 80 million people, whatever the number is, that are Trump supporters? Well, they're being deplatformed, so they can't communicate with each other. And that's going to aggravate things. It's going to piss them off. Exactly. So things are going to boil over or start boiling over this year. Yeah, I think something that resembles a civil war is possible at this point, as shocking as that is to say, because the people in the red states and the blue states have actually come to hate each other. They can't even carry on a civil conversation anymore.
I want to say it was shocking when you told me that maybe a year and a half ago, and no longer shocking. That's what I'm saying. You're such a visionary, and unfortunately, you're right on this one. When you saw those scenes of the mob overtaking the Capitol, Doug, what was going through your head?
Well, I was of two minds. On the one hand, it's supposed to be the people's house, but that's not the case. It's the place where the deep state lives and plot with each other. So on the one hand, but on the other hand, I don't like to see destruction of property. But what these mostly Trumpers did wasn't even remotely comparable with what the Antifa and BLM and Democrat supporters did in places like New York and Minneapolis and Portland and many other places. It was extremely mild. And my guess is that most of the actual damage was done by Antifa and BLM plants there. So now that event, which is going to result in a domestic war on terror against people, they'll say it's the Trumpers, so they'll pass a whole bunch of stupid and repressive laws, just like they did after 9/11 with the Patriot Act. So this is going to further polarize people in the US. It's not good.
Let's talk about recovery, which is a topic you've spoken in depth about, Doug. You've said, look, there's not going to be a V-shaped recovery. If we're lucky, we might get something that looks like a K-shaped recovery. But we're living in a world where the rich just keep getting richer, and that's the worst, really, case scenario.
Yes, it is. And I don't doubt that in the years to come, starting this year probably, and when we're talking about K-shaped, it's for the richer getting richer and the poor getting poorer rapidly. It could be like in the early 20s in Germany. We have uh, left-wing and right-wing mobs battling each other in the streets. I mean, this is serious. Listen, I hope I'm dead wrong, and I'm interpolating scenes from science fiction novels. But
That's how it's playing out.
well, look, trends in motion tend to stay in motion until they reach a genuine crisis, and we haven't reached that genuine crisis yet. And this trend is accelerating. It's not just in
Yeah.
motion; it's accelerating.
As ugly as it is, as a historian, you're a historian, Doug, and a philosopher. Is it interesting to you on that level?
Well, you know, nothing really changes, and it's pretty much like what happened with the fall of the Roman Republic when it turned
Mhm.
into the empire. So it is interesting to watch history repeat itself. Not exactly, but it was Mark Twain that says it doesn't repeat itself, but it rhymes. But listen, I don't want to go. I've said for years, you can just turn off the audio on the news and fire up the Rolling Stones Street Fighting Man for the audio portion of your viewing pleasure. But listen, I just want to watch this stuff. I don't want to get involved in it anymore. Uh, Frankly, it's too stupid and it's too dangerous.
Let's get to mining, Doug, because in our last interview we had promised the folks that we would talk mining and what Doug Casey looks at. I mean, this is a really one of your greatest fields of expertise here. You have many, but you've been in mining a long time here. In the past, you've said, look, there's about 2,000 public companies that consider themselves in the gold business, but they really range from the majors like the Barricks and the Newmonts to some guy in the desert with a mule. So the question is, how do we pick the winners in the space? What are things we should be staying away from? And do you think that we could still make money in this space? So I want to cover all this ground with you here right now. So
Okay.
let's just start with, on that thought of this huge gap we see between, real companies like the Newmonts and, like you said, some guy in the desert with a mule. Is this specific to the gold industry, this divide?
Well, it's certainly kind of specific to the mineral exploration business, but mostly explorers explore for gold for a number of reasons we don't have to go into now. And first of all, let me say, I think right now is one of those superb times to buy mining stocks because with gold at 1800, 1900, 2000, where whatever it is or is going to in the next little while, all in sustaining costs
Mhm.
of miners that are actually producing average $1,000 per ounce. So the fact is that mining companies are going to be coining money, making huge amounts of money with gold prices at this level. The stocks are lagging though. Why? Because the public is not involved at all. They buy ETFs, they buy mutual funds. They think they're in the stock market because they have a pension fund. So there's been no buying to speak of these mining stocks. They've gone up quite a bit this last year, but it's not even a rounding error on a rounding error relative to the regular market, point number one. And point number two, uh, less people believe in gold among the American and Canadian public, I should say, than has ever been the case in the past, because we've had a couple generations of people that have been programmed and politicized and propagandized by college. Everybody goes to college these days, it seems, where they pick up all kinds of false economic ideas. They think, like Warren Buffett does, that gold is a pet rock.
Mm.
So yeah, the miners have lagged a lot. But even Buffett, in that quarterly report, the last one showed that he bought a whole bunch of Barrick. Look, the next bubble is going to be in gold and gold mining stocks. And it's going to be like getting the contents of Hoover Dam through a garden hose, which is an analogy that I've used many times in the past, and it's going to happen again. So that's kind of my overture for this crappy business called mining. And it is a crappy business. Basically, I mean, listen, kids don't want to go into mining today. Who wants to play with big yellow trucks playing in the dirt when you can, create nap and become a billionaire overnight? So there's no interest in mining. That's why you want to buy it right now, because yeah.
Sorry, no, but just on your first point, Doug, about kind of no interest in the miners right now. How much of it do you think has to do with this 300% run up in Bitcoin? Do you think of those people, speculators who perhaps would have speculated on mining, are looking to Bitcoin?
To some degree, but the important thing about Bitcoin, I was a late adopter to it. I didn't get into it until July of 17. But Bitcoin has actually all the characteristics of a good money, just like gold does. And it's better than gold in some ways for use as a transfer device to take money across borders and between people without using a bank as an intermediary. In any event, at some point in the next few years, as they create these trillions of new dollars, we're likely to have a crack up boom, which is a phony artificial boom where everybody's buying anything to get out of the dollar, which is in the future going to be losing value at high rates, and people are going to be afraid to leave it in the bank because the banks are unstable. So they're going to buy real goods, cars and houses. That's a crack up boom, a phony boom. It's not economic. And one of the things that they're going to buy is Bitcoin, because it's one way of getting out of the dollar. They're going to buy a lot of gold too, which is the classic way of getting out of fiat currency. So no, they're kind of competitors, but now Bitcoin's been wonderful for gold, I think, because it has exposed a whole generation of people to the fact that paper money, the government's issue, is fiat currency. And people have had to think about, why do I want Bitcoin instead of dollars? So it's gotten a lot of people thinking. So I'm a big fan of Bitcoin for many, many reasons.
I agree with you on that, Doug. So getting back to the miners, I know you've said that 95% are gambles, and that you really have to do your homework. You have to understand rocks to some degree. You don't have to be a geologist per se, but I know you've said you have to understand somewhat the business if you're looking to invest in it. I know you don't like to. Sorry.
Go ahead. I'm sorry, Danielle.
No, I was going to say, I know you don't like to tout, certain stocks, but maybe you can help shed light on common things we should avoid, or common things that a lot of these promoters, and there's a lot of promoters in this space, say that we, should be red flags for us.
Well, that's correct. And when it comes to buying mining stocks, I've got a checklist actually, just to make sure I don't forget anything stupidly. And I call them the 9 Ps, things that all begin with P, that you want to examine before you take a substantial position in any company. And we can go over those. But actually, one thing that's become popular, in the context of mining stocks where, there's nobody involved in that, nothing's popular really, is royalty companies. I mean, Pierre Lassonde and Seymour Schulich, who are old friends of mine, although I haven't seen them for years, formed the first mining royalty company, I don't know how many years ago, 30 years ago. And it was extraordinarily successful, Franco-Nevada. Now there are probably a dozen royalty companies for gold, and they're a very safe way, assuming the managers of the company know which royalties to buy.
Right.
But still, they're a very safe way to get participation in this business. And it's the first thing that institutions, when they finally start buying gold stocks again, which they will, are going to buy, because it's kind
Interesting.
of a
Yeah.
fail-safe way of profiting from gold prices and mining. So yeah, I'm big on, in fact, my two biggest positions are royalty stocks. They happen to be, I'm talking my book here, they happen to be Metalla Royalty,
Right.
which is gold, and Nova Royalty, which is copper and nickel
Right.
primarily.
Right. And a friend of our show, EB Tucker, behind both those companies. Um, so you like the royalty play more than, because the first thing I get asked is, well, should I buy Barracks and then Newmonts, right? It's just
Nothing wrong with that, but look, these are big, increasingly dumb companies, not run by the entrepreneurs, the founders anymore. They're run by suits mostly. So I'm not interested in the giant mining companies. Nothing wrong with owning them. They're going to go up a lot. But I like the mid-sized companies and the smaller companies, which are still run by entrepreneurs. And out of those 9 Ps that I mentioned, actually, you can forget the other 8 Ps. Do you really need to know about geology and mining engineering? And no, it's all about people. You got a company that is run by good people, people with a track record of success, people that have Boy Scout virtues, people that have proven technical competence. The odds are they're going to be a success. So that's all you have to do. Look, one of my friends in Vancouver, who's a broker who's made himself hundreds of millions of dollars, he admits he doesn't know anything about mining per se. All he knows is that he bets on guys that are winners, who know what they're doing and are honest. So anything that has Ross Beatty or Lucas Lundin or Sean Rosen or oh God, I'm trying to, who are the guys that, the Pollockans, anything their name is attached to, he just buys it reflexively. And that's your best chance of winning, as opposed to playing amateur geologist.
I know you don't like giving a list. It's like an Oscar speech. You're always afraid to forget someone, Doug. No, but those
Yeah,
are
and there's a dozen other guys that I could name, and I feel bad about naming all of them, so I shouldn't even name those guys.
no, but that's all good advice. So you and I have attended, I don't know how many mining shows, but you all, we get approached. Maybe they're not approaching you, but and say, I got, you got to get in this company, you got to get in that company. And I guess, how do you filter out that noise? Because everyone will come up to you and say, this is the this is the next great bear that's going to go from, 30 cents to $8.
Well, this is where I do look at the P's, where the people involved are not proven commodities, let's say. Okay, so I look at the structure of the company, and generally speaking, these speculative companies tend to have warrants attached. And I generally don't touch anything unless it's got a full warrant. Some people have half
Okay.
warrants or quarter warrants that last for a year. I'm not interested, generally speaking. I like a full warrant that is good for 2 years, better 3 years, better yet 5 years. And after 4 months, I can sell the underlying stock, maybe even at a profit, and keep the warrant for free. An ideal portfolio in a speculative area like mining exploration is 100% warrants, where you don't have any money involved,
Okay.
but you've served your purpose by financing the company, buying the shares, but then you sell them.
I like that.
Although if it turns out I like the company, I keep
Yeah.
the shares as well as the warrant.
Okay, good, really good insights there, Doug. Just one final thought on the miners. Do you have a preference right now if it's a gold play, a silver play? What about copper, lithium, cobalt? What does Doug like?
I like them all, and I'll tell you why, Daniela, because commodities in general have been in a bear market for almost 10 years.
That's right.
And relative to stocks, they're actually, this is kind of unbelievable, but it's true. Relative to the stock market, commodities are at their lowest level in history. So I'm interested in all the metals at this point, all of them, because commodities in general are so ultra cheap relative to everything else in the world. Uh, and I can build an argument for owning all of those metals, actually, because they're the raw materials of civilization. So yeah, all of them, frankly. I don't think there's anything that I actually don't like in the way of metals at this point, or for that matter, even agricultural commodities. Commodities are cheap. I mean, listen, the stock market is in a bubble because of all the money coming out of central banks. Uh, the bond market's in a hyper bubble with 0% interest rates. Real estate is grossly overpriced, although it's coming down now in places like San Francisco and New York and Vancouver too, I think. No, commodities are where you want to be, and I'm very comfortable with that.
Doug Casey, I thank you always for giving me some of your time. I really appreciate you speaking with me, and I always learn so much from you, and I'm sure our viewers do as well. So thank
Well,
you, Doug.
Danielle, I enjoy talking to you anytime as well. So
Hopefully in person soon. All the best to you and all the best to our viewers. Thank you for watching. We'll have much more for you on Stansberry Research. In the meantime, you can follow us on all our social media platforms. Thanks for watching. I'm Daniela Cambone.